Hello my friends and welcome to this new episode on the third pillar of our technical analysis, which is about the momentum. So the momentum indicates where the strength is, whether it is in the hands of the buyers or in the hands of the shorters. So the buyers are the ones who try to push the Bitcoin price up, and the shorters are the ones who try to put the Bitcoin price down. In other words, for these two groups are the bulls, which are the buyers, and the bears, which are the shorters. So it's very important to understand where the momentum is. Is it in the hands of the bulls or the buyers, or is it in the hands of the bears or the shorters? And a good indicator for this is a momentum indicator, which is MACD. That's my favorite momentum indicator. You also have the RSI, but in this course we're only going to see the MACD indicator because usually that's the most reliable one. And to get the MACD indicator, you need to go in TradingView to Indicators, and then you're going to type here MACD, and you're going to choose this one, Carré MACD, which was made by the Carré Bleu developer. So you choose this one, you click on it, you can click the star here to make it part of your favorite, and here it is. That's the MACD indicator. So what I like to do is go to Settings here to just draw the line around it, and this indicates where the momentum or the strength is, whether in the hands of the buyers or the shorters. So basically, when the MACD is increasing or reaching some high levels, that usually means that the momentum is in the hands of the buyers and we are probably doing an uptrend. And when it's decreasing or reaching a bottom, that means that the momentum or the strength is in the hands of the shorters. But that's not how you use the MACD indicator. You use the MACD indicator to spot some what we call divergences. So let me explain. Right now, so at the time I'm speaking, we are in June 2022, okay? The Bitcoin is going down. We're probably in the capitulation phase, and we're going a downtrend, and we're probably going to follow this with a depression phase where Bitcoin is doing not much, going horizontally and making people bored and capitulate more. But it's very important to understand more or less where we're going to stop falling. Because right now the Bitcoin is still falling. It's like a falling knife. So we need to know when it's going to stop its fall, because we need to catch the bottom. Especially if you want to do some dollar cost average, you need to know where it's going to be the bottom. If you dollar cost average at the middle of the fall, well, you will lose a lot. And so a good way to know where the bottom will be is to look at the weekly time frame or the daily time frame and see some divergence. A divergence is when the Bitcoin price goes down, but the momentum actually goes up a little bit. That's a divergence because the Bitcoin price and the momentum are going in opposite direction. And on the other hand, when we are in a bull cycle and going up, you need to look at the momentum and see if there is some divergence to spot where the top of the market will be. Because when this happens, what will happen is a divergence on the other side, meaning that the Bitcoin price is going up, but the MACD indicator is actually going down. And that's usually when we are probably going to do a reversal. We're probably at the top of the market because the MACD doesn't follow the Bitcoin price like in a convergence. It goes the opposite direction, doing a divergence. So that's why I really wanted to teach you the MACD indicator, because by spotting those divergences, that's when you will improve when you're going to spot the top of a market or the bottom of a market. All right, don't use it for the convergences. It's not very useful, but it's extremely useful when you use it with the divergences to spot the bottom or the top of the market. All right, so that's it for our three pillars, the three pillars of our technical analysis. Now we have one final episode in this part 3 and also in this course where I'm going to teach you about order flow analysis, because indeed that will give you some even more and even stronger indicators whether we are in the bottom or top of a market.